Hi, in this video I'll be sharing with you how exactly you can trade the fair value gap strategy. As a smart money trader, one of our point of interest is the fair value gap. So we will trade, as a smart money trader, we will trade order block as our point of interest, which is OB. We will trade fair value gap. It's another point of interest. We will trade smart money cube. It's our point of interest. Number 4, we will trade the breakers block as our point of interest. So we have other block, fair value gap, smart money cube, and the breakers block. So these 4 points are all what our POI. These are zones where we are expecting price to pull back to after determining the trend. So this current trade is based on fair value gap, and I'll be showing you exactly how you can do that. First of all, we always begin by identifying the trend of the market. Remember, the trend is always your friend. So looking at this scenario, price is in an uptrend. We have a higher low. This is our higher high. This is our higher low, and then we have a new higher high somewhere here. Okay, so you can see that for yourself. So now we have what? We have this higher high, we have this higher low, and then we have this new higher high. So this is the movement, the last structural movement. So in this movement here is where we want to identify our point of interest. First, we'll identify our order block, and a valid order block must take away liquidity. So this liquidity sitting here was taken by this price movement to this upside, which simply means that this is our valid zone. So we had this order block here. So that is our order block, a valid one there. Good. Then what is the next thing? A valid order block will create an imbalance. The imbalance is what we refer to as the fair value gap. So if you look at this point from here all the way to here, there is an imbalance. So this is an uptrend. So I'll just show you how you can identify an imbalance in an uptrend. Okay, so let me show you that now. So I want you to pay attention to this particular scenario. Let's see if we can zoom more. Good. So here is what we will do. First of all, you will pay attention to this. To the last, you will pay attention to the high of the previous candle before the candle under consideration. So which one is the candle under consideration? We are considering this candle. So that is our candle under consideration. So if you are considering this candle, you will pay attention to the last candle before that candle. So you will make the high, you mark the high of that previous candle. So this previous candle, this is the high. So you mark the wick, that is the high of that previous candle. Then you will as well mark the low of the candle after that particular candle. So here is the high of the previous candle. Then now, if we are considering immediately this next candle here, what we will do is that we will mark the low of that previous candle. So the high of the previous candle before the candle under consideration, which is this candle with the arrow sign. They will now mark the low after that candle. So here is the low. So we are referring to the low of after the candle under consideration. This candle now will mark the low of it. So here is the low of it. So that is the low. So we are now having what? We had this low. We had this high of the previous candle. So this is the high of the previous candle. Why this is the low, right, of the candle after. So now that we mark this high, I've marked this low, you realize that there is a space between the first one we marked and the second one. So this gap here is what we are referring to as the fair value gap. This space you are seeing here is our fair value gap. You can call it imbalance or improper price action. In an ideal situation, a candlestick is supposed to interwove each other. What that means is when this projector, this is supposed to come down to lock up this. And then this one is supposed to go up this way to meet up with this one. So, but in this scenario, we had the same situation. So there is no lock up here. There is no wick to overlap this side. So what we had, it was this one here. So our obvious point is this particular zone. So what do? We will now kindly pick up and mark this zone as our point of interest. So now we had what? We had marked our fair value gap. So this is our order block, and then all of this zone is our fair value gap. Okay, there is still a video on this channel. If you don't understand, you can still go back to rewatch how to mark the fair value gap. So now that we have marked out this fair value gap, we will now wait patiently for price to return into the gap. So you see that? So price does what? Price went all the way to this upside and return back, fill into this gap 100%. Because as you can see, all of these zones here in this box is the zone of the fair value gap. And because it's an improper price action, price return from the outside all the way to inside this zone, fill in the fair value gap 100%. So after that, the next thing we want to see is an entry confirmation. So this entry confirmation is here, which is a bullish engulfing candle. So you see that that's my bullish engulfing candle. So my initial entry was supposed to be here. So you buy from here. So however, what I am having here is a late entry because I missed this entry. So since I missed this entry, I was patient. The last time I met price was when price was here. So how do I come into that trade? I kindly pick up my trend line and I marked all of this range because I realized that price was ranging in that zone. So I quietly mark this zone and I wait for price to break out. So immediately price break out of this zone, that is when I now make my buy entry. So you can see that the process is simple and it is seamless, and I believe you have learned something new. Please do not forget to like, to share, to subscribe, turn on your notification so you'll be the first to get notified when we upload our next video. Thank you and see you in the subsequent video.